Good morning, good morning, good morning. It is Monday, the 12th of May. It is the morning blast. All is right in the world. There's not a cloud in the sky. Myself and my dear friend Michael Brown are here to kick your week off. But before we do, let's get the legals out the way. As usual, nothing discussed in this space session constitute trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Daisy, or indeed Mr. Michael Brown. And I think we should start by just acknowledging that I'm going to raise my hand and say I completely underestimated the power of chat in Geneva. And I do think we should also flag, a big hats off to those in the executive club that no doubt got in on the Globex Open ahead of this announcement this morning. For those of you that don't know, obviously it looks like the results of the chatter in Geneva is far better than initially expected. I was expecting just a broad framework, and until about 3 hours ago, that's what it looked like it was going to be. Michael, what are your thoughts?
Very good morning, Ryan. Good morning, everyone. My initial thought then was I was being made redundant. You seem to be taking the space away on your own.
Well, yeah, I do try.
But no, good morning, everyone. It is a risk on Monday morning. Well, at least it has become so in the last half an hour or so. Shall we crack on?
Yes, let's.
Indeed, let's. As Ryan rightly alluded to, all eyes on trade talks between the US and China over the weekend in Geneva. And, well, those talks ended yesterday with the market being left in a little bit of a state of suspense. Treasury Secretary Scott Bessent noting that substantial progress has been made towards a deal and that an update and details on that progress would come this morning. And indeed, details on that progress have come this morning. And to be honest with you, have been quite considerably greater progress than most people had been
Yeah,
expecting.
hold my hands up.
The US have agreed to cut tariffs on Chinese goods to 30% from the prior 145%, while China has agreed to lower its tariffs on US imports to 10% from the prior 125%. These changes are effective from the 14th of May, and just for clarity, the reason why the US tariff is higher is because it includes a 10% quote unquote reciprocal levy and then an additional 20%, which is purportedly to do with fentanyl coming into the United States. These tariff changes will be effective for 90 days, according to the readouts that we have had this morning. But to be completely honest with you, I would be confident and comfortable at the moment to say that those changes are as good as permanent. What we have seen over the last sort of month or so since Liberation Day, quote unquote, is that actually neither side, particularly the US side, has the ability or the desire to stomach tariffs at those high levels for any prolonged period of time. So I think it's pretty likely that the 90-day period, if it does expire, will end up being extended. What is the aim of the 90 days? Well, ultimately, further talks. The United States and China, once those tariff changes have gone into effect, have agreed to set up a mechanism to continue trade and economic talks, presumably with the aim of reaching a more comprehensive, full, and quote unquote proper trade agreement at some date unknown in the future. There were a few comments from Treasury Secretary Scott Bessent accompanying all of this readout that we have had this morning. And in fact, the Treasury Secretary and the US Trade Representative Jameson Greer are still speaking. So headlines may be crossing as we do this call. But two of the most interesting lines. Firstly, Bessent noted that the matter of currency was not discussed in the talks over the weekend, which is interesting given well, the tendency, shall we say, of the Chinese government to move the
How
renminbi
dare
to
you?
basically wherever they want it. And secondly, the Treasury Secretary Scott Bessent also said that the United States, and I quote here, sees the possibility of agreeing purchasing agreements with China. Now, of course, you will recall, or keen market observers will recall, that these purchasing agreements were also part of the Phase 1 US China trade deal that was agreed all the way back in 2019. And and China was supposedly meant to be buying all various amounts of soybeans and corn and all sorts of other stuff from the United States, and didn't actually spend a penny. So do just take
90%
that
done,
with
my
a
friend. 90%
well,
done.
exactly. So do just take that with a little bit of a dose of caution. In summary, the market has taken this very, very positively, as one would expect. A sort of classic risk-on vibe across the board this morning. The S&P future up by about 3% or so, trading north of the 200-day moving average for the first time since the back end of March, while the tech sector leads the way with the Nasdaq up by about 4%. Treasuries selling off across the curve. With the front end leading the way, the 2 year yield probing 4% as I speak. We also see the dollar trading broadly firmer against most peers. You may go, why is the dollar trading firmer in a risk on environment? Well, it's because the dollar's actually been trading more in line with shifts in trade sentiment recently, as opposed to shifts in risk sentiment. I guess the vibe has very much been buy America or sell America, and that doesn't really distinguish between assets. So we see the dollar up by about 1% against most peers. The dollar index north of 101.5, cable below 132, the euro testing 111 to the downside, and dollar yen trading north of 147.50. Gold also trading softer this morning.
Gold.
The yellow metal
Sorry.
down by about 3%, trading at $3,200 an ounce. Just lastly on, well, a couple of other bits on this before we move on. The first is just to bear in mind that 40 days later, we've basically ended up back where we started in terms of tariffs on the United States. So I'm going to go and have a long lie down in a darkened room and ponder what on earth we've all been doing for the last month and a half. And and secondly, as I alluded to, it does seem, and certainly the way the market is taking it, is that 90 days equals forever in terms of these tariff reductions. The final thing I would say is that we haven't actually heard directly from the president on this just yet. Of course, it is currently about 3:30 in the morning on the east coast of the United States, but we are due to be hearing from Trump. He is talking about healthcare at a press conference at 2:30 this afternoon, London time, 9:30 this morning
Chinese
in
dentist.
Washington, D.C.
Topical.
What was that?
Chinese dentist, half two.
Oh, God. Yeah, very good.
For
Very
those
good.
for those of you that are maybe not English, so that's a very English joke. It's 2:30. But if you say it in a Chinese accent, it sounds like 2:30.
That
Anyway,
sounded more Irish than Chinese, but never
I
mind.
didn't do the accent. I didn't do the accent. I didn't do the eyes. Move on.
Good, 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 good. So yes, of course, do bear in mind we are likely to hear from Trump at some point. It's going to be the biggest, the most beautiful, the best deal
I
ever, the biggest victory that the United
thought
States has
we're
ever
talking about
seen.
me.
And of course, this comes before Trump heads off on his trip to the Middle East, which he is going to spend most of the day flying. So do of course bear that in
Speaking
mind.
of Middle Eastern flying, where he might be picking up a new 747 as a cheeky gift from the Qataris.
Yes, I don't want to mention the word beginning with B for fear of potential libel lawsuits, but flying
Does
to
it rhyme
Qatar,
with Ibe? Does it
it
start
might
with
do,
bra
yeah.
and Ibe?
I'll just fly to Qatar, pick up a 747 that I'll use as president, and then it will magically become my own personal plane when I'm not president anymore.
And do you know what? And
Okay.
there's me, happy as Larry, when you buy me a pint. I think I need to set my bar considerably higher.
And when I buy you a gin and tonic, you're over the
Oh
moon.
my
So
god! Oh my god! I phoned home to me mum.
Oh dear. Right, away from tariffs, because there are a few other bits and bobs going on, and we
Oh,
don't need to talk about trade all day. We also heard from, speaking of Trump, on Friday. Reporting on Thursday suggested that President Trump had been on the phone to the Speaker of the House, Johnson, asking him to raise the top rate of tax and basically increase taxes on the wealthy. About 18 hours later, Trump came out and went, "No, absolutely not. We should not increase taxes on the rich. But if the GOP want to do it, then that's okay." So thank you for the nice, clear messaging on that one. The reason I bring
yeah.
this up is because now that the issue of trade is sort of quote unquote solved, at least from a market perspective. It's unlikely to be a massive worry in the short term. I think focus will increasingly turn to the issue of tax, and particularly the one big beautiful bill that the Republicans want to get through Congress before Independence Day, I believe, which is of course on the 4th of July. Other bits and bobs here in the UK. Banking news, Santander, they rejected a bid from NatWest for the Santander UK retail unit earlier in the year. NatWest wanted to spend 11 billion quid buying this unit. Santander said that that bid was too low. From memory, this is, I think, the third or fourth time that someone has tried to buy Santander's UK retail arm in the last sort of 6 months or so. It's basically something that Santander don't want. They ended up acquiring it back in the GFC when they bought Alliance and Leicester, Abbey National, Bradford and Bingley, all of these other
Yeah, it's the
building
ginger
societies in the
stepchild of the
UK.
banking. It's the ginger stepchild of UK banking.
Well, it really is, and the reason Santander don't want it is because it's very, very capital intensive compared to
Oh yeah,
their
exactly.
operations elsewhere. So they're trying to get rid of it, but apparently 11 billion quid is not enough. Sticking with the UK, I don't ever want to celebrate someone losing their job, but I'm going to
But
say
you
that this
will.
is. I am going to here, and this is not before time. The chief executive of the ONS, Ian Diamond, he has stepped down with immediate effect. Why has he stepped down? Well, because his organisation is a complete and utter shit show, to be completely honest with you. I think we're now
Pound in
measuring
the
it.
jar. Pound in the jar.
I oh, sorry, that could go somewhere else. I think we're now measuring it. Yeah, keep up. I think we're now measuring it in years since the ONS last produced an accurate data release. So he is on his way and will hopefully be replaced with someone who has half a clue of how to run the
Oh yeah,
organisation.
right on. Knowing how these things operate, don't be shocked if we get someone far worse.
Well, yeah, of course. And I was going to say, I don't know why I'm getting my hopes up on that one. Lastly, from me this morning, just back in terms of Friday, we did have a whole host of Fed speakers when the blackout period came to an end. 9 Fed members on the wires as the week drew to a close. So that's about half of the FOMC. The fact that you've got that many speakers on the day that the blackout period comes to an end should, I would argue, send a pretty strong message in and of itself. I'm not obviously going to go through all 9 of those remarks, but the overall take was that everyone wants to stay in this wait and see mode. Nobody is in a rush to ease further just yet. And pretty much everyone agrees that policy is in a good place or the right place at this moment in time. So, despite Mr. Trump wailing once again about the need to lower rates, it doesn't seem like the Fed are going to play ball just yet. And frankly, nor should they. And
Well,
for the time
this is
being,
it.
that's all from me.
Well, do you know what? On the Fed, I think I think we've just proven Powell right to wait and see. Because if he would have cut rates,
Well,
I suppose if you're looking at it in just terms of what your asset prices are doing, your 401k, if he would have cut rates and then this happened, we'd be miles higher. But and we're still pretty high. But yeah, I think in terms of monetary policy, the wait and see approach was obviously the right one. But there you go. Michael, thank you for the roundup of this morning and the weekend and end of last week. So just cutting in with some choice headlines from the awesome overnight news roundup from our dear friend Zach. I always say, if you don't already subscribe to our Substack for this, get it sent straight to your inbox, etc. Do so. It's in our pinned tweet. Started off with some trade headlines. Obviously, this is very fluid because these notes were kind of written before the big announcements. But obviously, as Michael said, uh, tariffs have basically been pulled right down to 30% on Chinese goods, 10% on US goods. One thing I haven't noticed, Michael, and you might have seen this on your feed, is the severe restrictions that China put onto rare earth exports. Now, this was brought in technically before Liberation Day. And what I've seen so far is China have only announced that they're removing the non-tariff kind of barriers that have been put in place since Liberation Day. So I've not seen anything on the rare earth. So maybe I can see Tracy's listening. So maybe one that she would know more about.
I
Uh,
haven't seen anything on that either, and that's actually a very, very good point.
I'll stop it. I come up with occasional ones. But this is the thing.
Rarely.
We actually mentioned last week that was a bigger story than I think many people were kind of catching on to, purely because there were so many other big stories around. But rare earth minerals keep the world going round at the moment. But anyway, I digress. China's vice premier calls the trade talks constructive. Says the joint statement will be good news for the world. Obviously, we've just had that. Let's cut down through those. Trump hails the China-US talks as total reset and great progress. Citi predicts US tariffs on China could drop to 45%. Well, they're already out the money on that one. And they're calling this a phase 1.5
Oh,
deal.
poor Citibank.
Well, this is it. This is what happens when you go and write your note too early, because everyone's now having to scramble, withdraw their previous note and come back.
I tell you
But
what, I must admit, just you saying that. Sorry to interject on
that's all right.
writing notes early. I wrote up a note just after the FX Open last night. Just some sort of initial
Yeah,
reflections on what's going on, which is already out of date, of course.
yeah.
But as I hit publish, was just as Trump put out on Truth, the next thing I post will be the most important and
Oh yeah, I
impactful
saw
thing
that.
I ever send. I'm like, oh, you fucker.
Yeah, right. This is the problem. That I don't envy you. I'll tell you one thing though. So, Kenneth Brooks or Bro, however you pronounce it, senior strategist for FX and rates at SocGen, has put out a piece since this announcement, courtesy of our Reuters feed. Just to quote him, there's been a de-escalation between US and China, resulting in reduction in tariffs on Chinese goods to 30%. It's very clear vote by the market in favor of riskier assets in its step in the right direction of positive US assets and US economy. The dollar was lagging other markets in the recovery from April lows. We had equities back to April. New conditions are now for falling into place for a deeper adjustment and a bigger recovery of the dollar to catch up with equities and bond yields. So we'll see how that plays out. Columbus, so moving back to trade though, Japan's PM Ashiba insists on auto accord in a US trade deal, considers increasing US corn imports, ags and LNG. That's one thing we've said is the low hanging fruit on this. Chinese firms are accelerating the removal of foreign correspondence from supply chains amid the trade tensions. Colombia risks US trade retaliation after Petro's plan to join China's Belt and Road Initiative. Obviously, we saw what happened with Panama on that one. Just in macro news, because obviously trade is very, very volatile. Trade headlines are very, very volatile this morning. So it's a bit pointless me reading too much of those out because they're probably dead already. Macro news. Fed's Cook warns Trump's tariffs may reduce US productivity, potentially requiring higher rates. Fed's Musalem says tariff-driven inflation could delay rate cuts. Sees outcome as uncertain. Fed's Hammock urges caution, says more data needed on Trump tariffs impacts before rate decisions. All of those have kind of been proven right by what we said this morning, what we've seen this morning, wait and see, etc. Wall Street banks note investors trimming US positions due to Trump's erratic policies and Fed attacks. A CBO director warns Trump's trade war could deter foreign investors from holding US assets. One thing to note on this, obviously, this morning's been very, very good news, but it does highlight the explosive nature of this subject matter. One day tariffs are on, one day they're off. There's a lot of uncertainty. And yes, today's been a great day for risk. But if you're looking to make long-term decisions, this kind of explosive announcement of stuff is not what you want to see. So it'd be interesting to see how firms kind of are taking this when we start hearing from from individual kind of company leaders, which I'm sure
I
we'll get to today. Go on.
Yeah, I agree with you on that one. And actually, I think we made this point a short while ago. I can't remember what it was in relation to, but it was another sort of tariff or trade development where the news flow was a net positive. But again, when you take a step back, it just
Yeah,
sort of reiterates and speaks to the
exactly
fact
that.
that there is no consistency in policy
This
making
is it.
whatsoever.
This is it. Like, it sounds bizarre to say it when we're looking at the Russell up fucking nearly 6% or whatever based on headlines. But if you know, you're managing the capex of a gazillion-dollar company,
Mm.
this is not what you want to see. You want to see like nice and calm, and you can plan years in advance.
Well,
But
I
yeah,
think the way to think about it from that perspective is if you see 4% up, you can equally see 4% down
exactly
over
that.
the same time horizon.
Exactly that. Exactly that. Moving on, sorry, just with macro, sorry, we kind of got a little bit distracted. House Republicans plan to fund Trump's tax cuts by slashing climate law funds. China's factory gate prices dropped sharply in April. Consumer prices fell for the third month. Hedge funds boost bullish bets on Chinese stocks, anticipating a US-China trade talk progress. Well, they've done all right. Japan's service sector sentiment worsens in April due to US tariff concerns. ECB Schnabel says tariffs could limit rate cuts as inflation risks rise. And geopolitics, US encouraged by Iran talks in Oman, but divided on Tehran's uranium enrichment rights. Russia's Putin proposes direct Ukraine talks on May the 15th, directly with Zelensky in Istanbul. Zelensky agrees to meet Putin in Turkey on Thursday, urged on by Trump, who, from the kind of the stories we've seen over the weekend, he's running out of patience. I think, as children are, you need to keep them occupied, otherwise they get bored and start playing with something else. UK to unveil new sanctions targeting Russia during the European security meeting. India, Pakistan military chiefs to discuss next steps as ceasefire calms border tensions. Hamas to release the last American hostage in Gaza after the US ceasefire and aid talks. And just some equity headlines from me. Nvidia raises GPU prices by 10 to 15% to offset the H20 chip sale loss and TSMC's Arizona costs. OpenAI and Microsoft are renegotiating their partnership terms to enable future IPO while ensuring AI model access. TSMC's Arizona high yields lead US clients to fully book capacity for 3 new fabs. China's CATL, the battery giant, aims to raise
Mm.
$3.99 billion in Hong Kong listing, largest globally in 2025 so far. Sharp to sell Japan LCD panel factory to Foxconn amidst a strategic shift. UniCredit posts strong Q1 profit, boosting CEO's acquisition plans. Saudi Aramco reports a slight Q1 profit beat despite weaker oil prices. And finally, on equity news, just because it's a London IPO, we're hearing that Cobalt Holdings plans to raise 230 million with an eye to list on the London Stock Exchange. Great news for the London Stock Exchange because we don't get enough listings. But I'm kind of thinking, has anyone told them why people don't list on the London Stock Exchange?
Well, yeah, exactly. It is also
We'll take it though,
peanuts,
Michael.
but
We will take it with both
yes,
hands.
absolutely. We'll take anything we can get. Are you done, right?
I am, mate. Back to you in the studio.
Good, right. Well, in terms of today, then, and the week ahead, it is a relatively quiet economic calendar today, thankfully, because we've got far too much to occupy ourselves already with all of the trade shenanigans that are going on. And of course, that will be the main driving force behind the markets as we move through the remainder of the day. There are, in fact, no notable economic releases due from either the European or the US sessions today, although it is just worth bearing in mind that we do have a fair few BOE speakers on deck. There is the annual BOE Watchers Conference going on in London today, so we'll be hearing from plenty of MPC members.
Are
Of
you, are
course,
you not invited?
actually, do you know what? I actually was invited,
Oh, of course he was. Of
but,
course he was. And he turned around and said,
but
"Oh, fuck yourself. I'd
I,
rather
I
be down
was
the jam pot."
I was invited at about
Can't blame
5
him.
o'clock on Friday afternoon, so it was too late for me to
Oh,
make
they're obviously
arrangements.
trying to fill some seats.
Well, yeah, that's the vibe I got. I'm the last person
I'll
you
wait
want
for
at
my
one of
invite
those
this
events.
morning.
Um, so yes, we are hearing from them, and that's of course after the three-way split on the MPC last week. The only other thing to bear in mind in terms of earnings, Q1 earnings season really does slow quite considerably this week. The most notable report is going to be Walmart, who report on Thursday before the market open. But we do hear from Hertz after the market closed today. Of course, Bill Ackman, who is either everyone's favourite or least favourite
Yeah,
investor at this
right.
moment in time, has built up a huge stake in the firm, so maybe worth bearing in mind. In terms of the remainder of the week, tomorrow, early doors, we have the latest jobs data out of the UK. The usual caveats apply. The data's basically not worth the paper that it's written on. To give you an idea of how ropey the data is, if you dig into the BOE's last monetary policy report, the Bank of England have actually asked their staff to come up with an alternative labour market survey because the one that the ONS put together is so unreliable that they can't actually make policy on the back of it. So do with that information what you will. Also on Tuesday, we have the latest ZEW sentiment surveys out of Germany, and we also get CPI out of the United States. Headline prices seen rising by 2.4% in April, while core prices expected at 2.8%. Both of those would be unchanged from where they were in the month of March. Wednesday is also a very barren day, actually, in terms of economic data. Just final CPI out of Germany, and that is your lot in terms of Wednesday. So we'll quickly move through into Thursday when we get GDP figures out of the UK and the Eurozone. Of course, this is Q1 data, so we are likely to see a positive skew in these numbers as a result of a surge in exports, trying to front run the tariffs that were imposed by the United States. The Eurozone print, incidentally, is a revision to the prior number, the UK number, first estimates. And then a busy US data docket on Thursday afternoon as well. We're due to get the latest retail sales data, producer price inflation figures, manufacturing data from both the Philly Fed and the New York Fed, industrial production figures, and the weekly jobless claims numbers, although neither the initial nor the continuing claims print pertains to the May non-farm payroll survey week. We're also due to hear from Fed Chair Powell, who speaks on Thursday as well. And then last but by no means least, into Friday, we have the latest housing starts, building permits figures out of the States, GDP from Japan, and consumer sentiment from the University of Michigan, where, of course, the inflation expectations component will, one, be very, very closely watched, and two, more akin to inflation in Venezuela than in the United States. And of course, throughout the whole week, focus on what's going on in terms of trade, but also what's going on in terms of geopolitics as well. As we alluded to earlier on, President Trump on his way to Saudi Arabia and the Middle East for his first foreign trip of his second term as president. So we'll be looking for any progress on all of the various geopolitical issues that are going on, trade deals with countries in the Middle East, and side deals involving jumbo jets as well.
Exactly that, and more reasons to subscribe or at least use PIQ's platform, especially as our new all singing, all dancing mobile experience should be coming live this weekend, which I'm very excited about. If anyone wants an early beta test, give me a nudge on DMs and I'll send you over a link to play with it. And but yeah, the feedback on that so far has been very, very good. But Michael, thank you very much as always, my good friend. Listeners, we hope you've had a great weekend. Whatever you're doing this week, keep it tight, stay safe. Tune in tomorrow for more. Much love. We'll see you tomorrow. Bye bye.
Now.